Good morning, everybody. We'll be kicking off in a couple of minutes. Thank you to those that have joined us already. I can see your names rushing across the screen there. So welcome. We'll just give everybody a minute or two, and then we'll get going this morning. So a bit of light banter while we're just waiting for everybody. You've probably heard people talk about Taco Tuesday. At Sullivan Dewing here, we call it Webinar Wednesday. So welcome to our Webinar Wednesday for this week. We'll just give it a minute or two and then we'll kick off. If you can hear me, guys, would you mind popping just a little note in the chat box, please? That would be awesome. Thank you. That's great. They're coming through. Thank you, guys. Lovely. So responsive, everyone. Thank you. In our new way of communicating. All right, well, we might get going if that is okay with everyone. So, well, good morning and welcome to our webinar this morning on Wednesday, the 8th of April, 2020. Today I'm going to be working with you to look at the finer details of JobKeeper and exactly how you can access JobKeeper for your business. I've got some worked examples for you, and I've got plenty of time to for you to ask questions. I've had a lot of questions pre-submitted, which we'll go through. I've got some worked examples in our presentation today, which will hopefully start to answer some of your questions. So today we've got the National Cabinet meeting to legislate the JobKeeper payment, and it has been reported that Labor will support this package, so we are expecting it to go through today, which would be fabulous. I do note that there may be some changes for casual workers. Now, if there are any changes that is different to the information that I present to you today, we will send out a bulletin letting you know what those changes are. My name is Jeni WIlcock. For those of you that don't know me, I'm a director here at Sullivan Dewing. We're chartered accountants and business builders based in Caringbah, New South Wales in Australia. We continue to have a huge response to our webinars, and we know that you really need this information. So as long as you need it, we will keep presenting these for you just to get this information out in the most effective way for you. So it's pleasing for all of us to see the reduction in the daily growth rate of positive coronavirus cases. And this social distancing that we're all doing does seem to be working, which is fantastic. I know it's hard for everybody. It's hard professionally, it's hard personally. We just have to hang in there. We have to keep doing it. We have to listen to Scott Morrison and stay at home this Easter. I will shortly share our presentation with you, and next to the share box that you have on the bottom of your screen is a chat box, and any questions that you have today, please just post as we go. And then we'll answer them as best we can. Now, if there's any answers that I can't provide for you today, we will send those out when we send a recording of this webinar for you. So just a quick note as well, I've got you all on mute, so don't try and talk to us and just post those questions in the chat box. Okay, let's get to it. We'll go to our presentation now. All right, fantastic. Presentation's up. That's what we like to see. So today we're talking about the COVID-19 stimulus packages, particularly the JobKeeper, and how you and your business can get access to this JobKeeper package. A little bit of housekeeping before we start. You can submit questions, as I've mentioned, in the question pane. We have already pre-emailed these presentation slides to you, so you've got that copy as well. And after this webinar, we will send you the presentation slides again, a link to this recorded session. Our contact details are actually in this presentation now. We'll also send you any further responses to questions that we haven't managed to cover today. So today is all about the JobKeeper payment and the actual detail of this payment and how we manage to get through this detail so that we actually start to get some money into your bank accounts. We'll be having a look at a number of examples, and then I'll be going through some questions with you. So getting straight into JobKeeper. The first thing that we need to look at, so mostly today we're looking at the approach to JobKeeper from a business point of view. So this webinar is aimed at our clients and the people that we work with, the people that we help, mostly that run small to medium-sized businesses. So for these businesses, we know these businesses are in a lot of pain right now. There's a lot of businesses that are very uncertain about their revenue coming in, and not just their revenue, but their cash flow as well. So JobKeeper is a great way for these businesses to start to access some funding in the not too distant future from the government. So the first thing that we have to look at in terms of businesses is, do we pass the test? And the first test is the turnover test. So where you have a business and your turnover is less than $1 billion, what the government's looking for is they are looking to see a fall in your turnover of greater than or equal to 30%. Now, the way that they're going to test this initially is basically on your BASs. So the BAS reporting period, whether you are a quarterly reporter or a monthly reporter, they're looking at what is reported on your BAS now versus what was reported 12 months ago. So they're also basing this revenue on your BAS reporting method. So some people lodge their BASs on a cash basis, which means the BASs are lodged based on the cash that is received by their business and the cash that is paid out by their business. And some businesses report on what we call the accruals basis, which is when your business raises an invoice to your customers or receives an invoice from your suppliers. So your particular revenue test is going to be linked to how you lodge your BAS. So this turnover test includes all taxable supplies and GST-free supplies. So if you export, if you sell some of your product or your services to overseas countries, that amount of income is included in this test. It includes all taxable supplies that you provide within Australia as well. Now, what it does is when you fill out your BAS, the amount that you include there at G1 is GST inclusive income. You need to take the GST off for this turnover test. Now, if your business has any input tax supplies, let's say for whatever reason your business included receiving some residential rent, that input tax income is not included in this turnover test. So as I mentioned, it compares to the same period a year ago. So if you're looking at your March 20 BAS, it's comparing to your March 19 BAS. That's what you're looking for to try and calculate this drop of 30% revenue for you. As I mentioned, includes Australian-based sales. Now, if you have for instance, a New Zealand company as part of your operations, then it does not include those sales that you have made in New Zealand through another entity. Now, what the ATO have said is please apply if you expect a reasonable drop in turnover. So right now your drop may not be 30%, but if you apply now, then you'll be receiving from the ATO all the information that they have to give you. Not much has come out just yet, but all the information that they have to give you on how you can get access to JobKeeper. Just note as well that the ATO has come out and said that there is some tolerance allowed, so by all means go and apply now. So what happens if you're a new business? What happens if you don't have a period 12 months ago that you can compare to? Or what happens if March has just actually been a strong month for you, or the March quarter has been a strong quarter for you, and it's not representative of your ongoing business drop? So what the Commissioner has said is that they will, for these sorts of businesses, they will consider other information, additional information. They haven't let us yet know what that information is. The Tax Commissioner will have the discretion to set an alternate income test or an alternate test for your business. Again, there is no detail on that whatsoever yet. But the other thing to think about is if you are like a lot of our clients where March has actually still been a reasonably strong month, but revenue is starting to fall off towards the end of March and certainly in April, then you can actually get access to the JobKeeper payments after the month of March as your revenue starts to fall. So what we have to remember is this payment lasts for 6 months. It commences on the 30th of March and it finishes on the 27th of September. So you can hop into this cycle as you need to. So if as at 30 March you don't qualify, you might qualify as at 30 April or 30 May or 30 June. You hop in as you need to. So how do you apply? You have to voluntarily register. So nobody is automatically registered. You have to go and voluntarily register your own business. So you register your interest at ato.gov.au/JobKeeper, and you can do that any time from now. It's a very simple form. I've got an image of the form for you in a second. At the minute, it's an expression of interest, and the ATO will send you a text confirmation to let you know that they have received your expression of interest. I did trial this when it first came out for Sullivan Dewing. Very, very simple form. I've had the text confirmation, and let's see what happens down the track. So later on, so now you register your interest, and later on the ATO will ask for supporting information to demonstrate the downturn in your revenue. So when you Google ATO and JobKeeper, this is the screen that you get, and you just simply click on the Register Now for JobKeeper Updates button, and you will come across a screen that looks like this, that you complete very simply, and that's all that you can do right now to register your interest. So that was eligible businesses. Now let's have a look and see which of your employees might be eligible to receive this subsidy. So the employees needed to be on your books as an employee as at the 1st of March 2020. They need to continue to be engaged by you, the employer. So this includes full-time employees, part-time employees, permanent part-time employees, casuals that you've had working with you on a regular and systematic basis for greater than 12 months. It also includes stood down employees. These employees have got to be an Australian citizen, they've got to be an Australian tax resident, they need to be a permanent resident. We have an exclusion for some temporary visa holders. The employees need to be at least 16 years of age on the 1st of March 2020. So if you've got a casual employee that's worked for you for the last year, but they don't turn 16 until April, then they are not eligible. These employees are not able to receive the JobKeeper from more than one employer. They can only get it from one employer. So if you've got a casual that works for you, that also works for other businesses, they need to determine which employer they will receive the JobKeeper subsidy from. So a couple of little carve-outs that the government has put into this, that employees receiving paid parental leave from Services Australia, which was the old Centrelink. So if you have an employee that's receiving paid parental leave pay from Services Australia, they are not eligible for JobKeeper. If you, the employer, are paying that parental leave, then they are eligible. If you have employees on workers' comp and they are still working with you, but in a reduced capacity, then they are eligible. If you have employees that are receiving workers' comp and are at home and are not working, then they are not eligible. Now, there's a few more fine-tuned rules around that workers' comp area, so if you've got questions on that, please come to us. But the basic rules are, if they are with you and working, then they are eligible. If they are still employed by you but not working, then they are not eligible. If you have stood down any employees, you must put these people back on the payroll and they have to go back on the payroll of the employer that stood them down so that they can be eligible for the JobKeeper payment. The payment is only in respect of direct employees, not any employees that you may have through labour hire firms. So a lot of businesses, and certainly a lot of our clients, run their businesses through a trust, a partnership or a sole trader. And these business structures are eligible. They have to satisfy the 30% reduction in revenue, the same as companies do. So what will happen here is, where you have a trading trust, if you have individuals that provide labour to that entity, so if you have a trading trust and you actively work in that trust, if I could use one of our clients as an example, they have a business that supplies some services to the general public, and there is only one of the family members that actively provides labour to that entity to generate that income. Now, that one individual can receive that payment. Any other beneficiaries that usually receive a trust distribution are not eligible for JobKeeper. It is only the one person that is providing labour to that entity that is eligible for JobKeeper. So trusts has one individual. Partnerships has one individual as well. Sole traders, being one individual, can receive the payment. Now, if you are a company director and you don't take a wage, then one individual director can receive the payment. If you are a shareholder that doesn't take a wage but just takes a dividend from your company, one shareholder is eligible for the payment. And the proviso on all of these different entity types is that the individual must provide labour to the entity to be eligible for the JobKeeper payment. So this is going to cause some problems. It's great on one respect that we get one individual that is eligible, but where you, for instance, have a husband and wife that both generate revenue for the business, be it through a partnership or a trust, there will only be one of those individuals that is eligible, not both of them. Talk to us again about how this specifically applies to you. So what's the payment process? How do we actually get this money? So the government has told us that we will receive, as employers, $1,500 per fortnight per eligible employee. The JobKeeper is taxable to the employee as a wage, and it will be included in their annual payment summary. The employer, you, withholds pay-as-you-go withholding on this payment, just like you would do for any ordinary wages. If the employee is receiving any Centrelink benefits, Services Australia benefits these days, they must advise them of the JobKeeper income. So as an employer, you must notify your workers that they are receiving JobKeeper. I've seen some templates of letters. It could be in the form of an email, but it needs to be written to your employees that they are receiving JobKeeper payments. The employees must receive a minimum of $1,500 per fortnight. Now, if your employee usually receives more than $1,500 a fortnight, you keep paying them the same wage that you currently pay them if they are still working to their usual capacity within your business. I've got some examples on this shortly. If your employee usually receives less than $1,500 per fortnight, as an employer, you have to now pay them more than they usually get. You have to pay them $1,500 per fortnight. If you have stood an employee down, you put them back on the payroll and you start to pay them $1,400 per fortnight. So the payments must be made through the payroll system and they must be reported through single touch payroll. So if you have a business that is not yet using single touch payroll, you might have closely held employees, you might have IT systems that are not yet working on single touch payroll, there will be a manual claim process. No details on that just yet. So for payrolls paid for the week or the fortnight or the month commencing from the 30th of March 2020, that's what this applies to. So the first payment is going to be made by the ATO back to businesses early May 2020, and the ATO pays monthly in arrears. So this applies to all payrolls for the period ending 27 September 2020. So our time period here is 30 March 2020 to 27 September 2020. So in each 14-day period, so the government's looking at this in terms of 14-day periods, so 2 14-day periods each month. So the employers need to satisfy that each of their employees has received $1,500 in the 14-day period for the employer to receive the payment back from the government. The first fortnight commences 30 March and ends on Sunday the 12th of April. So if your business has dropped its revenue by more than or equal to 30% and you want to receive this first supplementary payment, then you need to run payrolls for all of your employees for this first period, and each person on that payroll has got to be receiving $1,500 as a minimum. That is irrespective of what you have been paying them in the past. This is then going to apply for each following fortnight. Now the final fortnight will be Monday the 14th of September to Sunday the 27th of September. So it's going to be important to know these dates. Okay, so an alert. So where I've got in green on the screen, whenever you see that, it means something we have to set up and take some notice of. So this is going to be the biggest issue for businesses. Your business has to fund the first month of payments before the ATO reimburses you. Now, these are payments at $1,500 per employee. These are not payments at the employees of at least $1,500. These are not payments at the employee's usual wage. Now, the ATO is particularly helpful. They say go to your bank for cash flow help. So good luck with that. There is the 250K available subsidy that the government is 50% funding. We have had some clients successfully receive notice that they will get this loan from their banks. I saw one the other day that was going to receive about $65,000, but there was a number of personal guarantees that needed to be made, a number of people that needed to be listed on that loan, and that was so a small amount for that business. Deferred payments for 6 months, 4.5% interest rate, repayable within 3 years. So you can go to the bank to help you in the short term, and the bank has also said that that they will come along and they will support loans to businesses based on future receipt of this JobKeeper subsidy. So you need to be talking to the bank that you are currently banking with. Okay, if you happen to run a pay run for an employee and you pay them less than $1,500, you will not get the JobKeeper payment for that employee. Really important point to note. Okay, so what happens with super and entitlements? The subject of many questions from our clients. So if your usual wage to your employee is more than $1,500 per fortnight, then you pay full super on that wage. That is where they continue to work for you in their usual capacity. If your usual wage to your employee is $1,000 per fortnight, then you only pay super up to the amount of their usual wage. So in this case, $95 on that $1,000 payment per fortnight. That's despite paying them $1,500. So you only pay full super when their usual wage is more than $1,500. When their wage is less than $1,500, you just pay super up to the amount of their normal wage. If you've got employees that are salary sacrificing their super, that arrangement can continue as it usually does. You've got to remember the $1,500 is a gross payment before salary sacrifice, before any other deductions. Now, employees' entitlements continue to accrue. That is their annual leave, their long service leave, any other entitlements that they have with you. You must, as employers, continue to comply with the Fair Work Act obligations. So the entitlements continue to accrue as though they were working for you usually. Okay, frequently asked questions. So I've got a number of slides for you here on this, and a lot of these are based on questions that we've been receiving from our clients here, and also questions, frequently asked questions that the ATO has published in their fact sheet. So, first question, are JobKeeper payments taxable to my business? Yes. JobKeeper payments are basically GST-free taxable income to your business. But what you've got to remember is when you pay them out again to your employee, that is a deductible expense. So essentially they're revenue neutral. The $1,500 you get in is matched with the $1,500 that you pay out, and it doesn't affect your revenue at all. Next question. What type of entities are eligible? Basically, all business types are eligible except if you're a government-related entity. So Australian government and its agencies, state and territory governments and their agencies, foreign governments, local council governments, wholly owned corporations of any of the above government agencies, and also banks, any business subject to a major bank levy. That's the major banks in Australia. So all businesses besides those are eligible for the JobKeeper payment. So the only time that your business is not eligible is if you have a company that is in liquidation, if you have a partnership or a trust or a sole trader that is in bankruptcy. They are not eligible for JobKeeper payments. So what happens if you've just started your business or your business has lumpy income, so income that's not consistent across any particular month or any particular quarter? How can you self-assess that your turnover has fallen 30%? So where you've got a business that was not in operation a year earlier, that the turnover doesn't represent their usual turnover, the business was newly established, or the business was scaling up. You might have expanded your operations and have generated more income than the same time last year because you had been scaling up your operations. You might have a business where the turnover is highly variable. This is where the ATO Commissioner will use their discretion and they will consider additional information. They have the discretion to set alternate tests for your business, and they have some discretion if your revenue fall is slightly less than the 30%. So what we don't have yet is any detail on what this additional information will be, on what these alternate tests will be, but as soon as we know, have no doubt we will get that information out to you as soon as possible. We have many clients that are going to fall into these categories, that we're scaling up, that are newly established, that have lumpy income. There is a number of exceptions here that we will be applying for the ATO discretion for. Okay, so what happens if your turnover decreases after March? So this is another alert for us to look at. So in March, your turnover has not decreased by 30%, but it has decreased in April. So what happens is the JobKeeper payments are not backdated to the commencement of the scheme. You will hop into the scheme as you need this support as your business drops 30%. And if, for instance, if you are not eligible until June, then once you are eligible, you will continue to receive those payments up until the cut-off fortnightly period of 20 September. So let's be clear on that. You're not eligible right now. You can see that your turnover is starting to dry up. You're going to be eligible in the future. You need to keep talking to the ATO and letting them know in the format that they're yet to tell us, but you will need to let the ATO know that your circumstances have changed, that your revenue has dropped more than 30%, that you now meet this turnover test and you are now eligible. And as soon as that happens, you need to put your employees onto that $1,500 per fortnight, lodge your payrolls through single touch payroll where you are, and then you will start to receive the JobKeeper payments back from the government. Okay, a really important point. Okay, my business is still operating, my employees are still working. How will my payments to them be affected? So in many cases, the payments and the obligations to the employees will not change. There's many businesses out there still working to the same capacity that they have been working to. They continue on as usual. And what happens is if they're continuing on as usual, but their revenue has fallen, they pay their employees and they then get the $1,500 subsidy from the government per fortnight. So the government's idea behind this is that they keep employers employing people in their businesses. They don't want these queues at, down at Services Australia at Centrelink. They want the people to be receiving the money through their employers. So if your business is continuing on as usual and your revenue has not fallen 30%, you don't get this JobKeeper payment. If your business is continuing as usual and your revenue has fallen 30%, you will get this JobKeeper payment as soon as that you pass that test. So don't forget, and this is a really key point, if you have employees that receive less than $1,500 per fortnight, you need to make sure you pay them up to at least $1,500 per fortnight to be eligible for your business to receive $1,500 back. Okay, so on that point as well, green alert at the bottom. This is going to be a cash flow issue for businesses in this first 30-day period, basically in this first month's period. So your business has got to fund the payments to the employees of $1,500 per employee per fortnight before the government pays this back to you. So basically you need to have a top-up payment. So if you normally pay them $1,000 per fortnight, you need to top that up to $1,500 a fortnight. If you continue to pay them the $1,000, you will not get the $1,500 for that employee. It's really important. So we absolutely recognise this is going to cause a cash flow problem in businesses. You need to find ways to manage that. Now, the ATO is going to give us further guidance on how this is going to work. So they say, I'll be happy to see when it comes out. So very important point to note, you have to pay the $1,500 to receive the $1,500. So what happens if you have stood down your employees without pay after 1st of March? can you back pay them to 30th of March? So yes, you can. So let's say you stood down 3 employees on the 15th of March. So what you now do is you put them back on the payroll, and then you start paying them basically from 30 March onwards, and then you can start to receive the $1,500. So you put them back on the payroll, you pay them $1,500, then you make your claim and you receive back your $1,500. So I let my employees go after the 1st of March if I rehire them, and am I eligible to receive the payment? Yes, you are. You have to rehire them. You have to, again, get them back on the payroll. Now, if you get them back on the payroll and you still have no work for them, you're essentially standing them down again, and that's okay. They're just back on the payroll receiving the $1,500. And as long as they're on the payroll, as long as you're paying the $1,500 and they're receiving it, you'll continue to get that from the government. So they do not have to be working any hours in your business to receive this $1,500. They could just be simply having a wash-through payment that the government, essentially, you pay out, then the government reimburses you for. What happens if I don't have the money to continue to pay my eligible employees? So again, just reminding you that, that the government has said that's up to you to sort out, that you need to speak to your bank and discuss the options that you have. I would certainly be looking at some of the other stimulus packages that are available, in particular the cash boost that flows through the lodgement of the BASs. The lodgement of this March BAS is critical for every single business, because this is the time that we are able to access the up to $100,000 for pay-as-you-go withholding. It's also the time that we are clawing back income tax instalments that have previously been paid. So our approach with our clients is that we are lodging this BAS for them. We're seeking some information on it from our clients first. We're lodging this BAS for them, and then we're calling the ATO as soon as that BAS is lodged, and we're deferring any payments that are due. Now, the deferral of those payments is including personal income tax payments, business income tax payments, GST payments, any other payments that are due, and in many instances we've been successful with a 6-month deferral on these payments. We've also been very successful deferring and lowering payment arrangements that are already in place. So the mechanisms that the government has given us through the ATO are absolutely ones that we need to be drawing on now to help us to have the cash flow to start to pay our employees $1,500 per fortnight, so that we can later get that back from the government. Bit of a clunky way of doing it, but that's the mechanism that they've given us. Okay, what do we do with pay-as-you-go withholding and super on our JobKeeper payment? So the $1,500, just to be clear, is the before tax payment that goes to the employee. You have to deduct your pay-as-you-go withholding as you usually would from any wage payment. So it goes through the payroll function through your software, you deduct the tax from it, and the net amount goes to the employee. So again, to reiterate, when you pay more than $1,500 to the employee, then the super obligation for you does not change. When the employee is having their wages topped up to $1,500, basically you only pay the super up to the amount that you would have paid in the past. Now, the ATO quite generously has come out and said, if you want to pay extra money, extra super on this top up to the $1,500, you're quite welcome to. Personally, I can't see many employers taking up that ability. Okay, another FAQ. I run a labour hire company. Will employees be eligible if their host employer claims the JobKeeper payment? So the employees that are only eligible are direct employees. So if you're an employer and you use labour hire, they are not eligible under your to receive JobKeeper payments through you. They would have to receive those from the labour hire company if the labour hire company was eligible. Some of my employees are not eligible employees, and that could be because they don't satisfy the residency test. They might be a casual employee that's been with you for less than 12 months. They might be younger than 16 years of age. If they fail any of those tests, then what support is available for those businesses to try and retain their employees? So as I mentioned, the cash boost through the lodgement of the BASs is one of the key places that enables business to basically save some money on tax payments that they can then use that money to spend on employee wages. There's the bank loan of up to $250,000. Very generously, there's the instant asset write-off of assets purchased less than $150,000. There's the accelerated depreciation methods and the ATO deferrals that I alluded to as well. So these are basically the ways that you can get cash into your businesses, reduce the amount of cash going out of your businesses in the form of tax payments so that you can continue to pay your employees. Now, the state government has come out also with a $10,000 cash injection for businesses. You need to have a look at the Services New South Wales website for that and register on that website. Now, I don't believe that the registrations are open yet on that, but keep your eye out on that Services New South Wales website and let's see if we can get any sort of access to that $10,000 New South Wales government cash boost. Okay, let's have a look at a couple of examples. We have Melissa, the sole trader florist, who's been operating for several years. She has no employees. She expects her turnover to drop by more than 30% compared to the same time last year. So Melissa will apply for JobKeeper and receive that $1,500 per fortnight. We have Peter that runs a landscaping company. Peter employs 5 full-time gardeners. And he's currently paying them $1,700 per fortnight before tax. He expects that his turnover will decline by more than 30% over the coming months, and he will need to stand them down or reduce their wages significantly. So there's 3 circumstances for Peter, and this is going to apply to many of your businesses. So if he stands down his team completely, he has to pay them the $1,500 now, and he will then receive the JobKeeper for them from the government, and he will not pay any super on that $1,500 that goes to those employees. That's if he stands them down. If he keeps them working to the full capacity, he will keep paying them the $1,700 per fortnight plus the 9.5% super on the full $1,700. He'll then receive the $1,500 back from the government to help him to continue to pay his team. Now, if he keeps them partly employed, and there's many businesses that have their employees on part-time arrangements at the minute because their work has slowed down, then he must pay them $1,500 per fortnight, and he only pays super on the amount that he would ordinarily pay them for the days that they are working. So if his employees are working 3 days a week, he pays them super on the wages that they will earn on those 3 days, and he does not pay the super on the top-up amount to get them up to the $1,500. He has to pay them $1,500, and he'll later get the $1,500 back. So those 3 examples will satisfy many businesses and their particular circumstances on what to do with their employees. Okay, so let's look at Susie, who runs a beauty salon. Now, Susie usually employs 3 permanent part-time beauticians, and she has been forced to stand them down without pay. Her business has had to close under the mandatory closure requirements that the government has imposed for beauticians. So her turnover has certainly declined by more than 30%. She is eligible for JobKeeper support. She will she has to immediately start paying her employees $1,500, and she will later, early in May, be reimbursed the payments of the $1,500 per employee, and that will happen for her business for 6 months while she continues to satisfy this 30% reduction test. When business picks back up, she still has those employees on the payroll. Her business can resume quickly. As they're stood down, she doesn't pay super on their $1,500 payment. Okay, so when you have an employee that was made redundant and then rehired, let's have a look at Scott, the personal trainer. Scott works for a gym, permanent part-time, and he earns $1,200 per fortnight. So Scott was made redundant on the 20th of March when the gym closed, and he's currently applied to Services Australia for his JobSeeker payment. So we know that the JobSeeker payment is less than the JobKeeper payment. So the gym that Scott works for, that gym has now rehired Scott under JobKeeper. The gym will start to pay him $1,500 per fortnight with no super because he was stood down. and they will now receive the $1,500 from the government, and Scott needs to advise Services Australia of his new income arrangement of the receipt of the JobKeeper income, so that he will then lower or eliminate that job seeker income that he had been receiving. Okay, so the ATO has put some compliance rules in place. So there's going to be all sorts of creative people running around trying to create strategies on how they can get additional employees on the payroll and additional ways that they can access these government subsidies. So have no doubt that there will be ATO audit activity, and certainly they are looking at any employees that were added to the payroll after the 12th of March when this was first announced. So if you now go adding employees to your payroll, and just remember, when you add an employee to your payroll, you have to submit a TFN declaration form to the ATO, and that form, the date that it is submitted is the date that it's applicable for. So don't think that you can go and backdate these forms. The ATO will absolutely be across this. You have to use these mechanisms absolutely honestly and to the spirit that they are intended to be used. So the ATO is going to be cross-checking data with Services Australia. So if somebody is claiming on the job seeker and the job keeper, the ATO will find that out and will approach those people. There are integrity rules for all companies and all employers, and there will be large penalties and imprisonment where we falsify claims. So we have to absolutely do the right thing. Okay, time for questions. Enough of me rambling on about presentation. I'm going to stop sharing this presentation now, and I will go to the questions that you have posted. If you do have a question, I encourage you to post that now. We have about 20 minutes for question time. Okay, over to our questions. Thank you for posting those. Okay, first question from Sophie. If you become eligible at the end of April, does that mean the payment only lasts for 5 months to the end of September? Sophie, that is correct. The payment finishes completely at the end of September. So if you become eligible in April, you only get 5 months. If you become eligible in May, you only get 4 months. So 6 months is the maximum time frame that you are eligible or that you can receive these payments. What eligible employees? What about a casual through labour hire but not more than 12 months? Doesn't apply. So anybody that you have through labour hire, you are not eligible to claim the JobKeeper payment for those people. If you have a casual that's been with you for less than 12 months, you are not eligible to claim JobKeeper for that casual. If you have a full-time employee or a permanent part-time employee that has been with you for less months, so long as they were employed as at the 1st of March, they will be eligible. So a big difference there between casuals, full-timers and permanent part-timers, which is why we may see some changes in this area when the government meets today. Next question from Lee. What about employees on PPL, but it expires in April, so they will be effectively without support? Can we apply for them on the date that they were to return to work? I don't know what you are referring to by PPL. But if you have any sort of employee, so if you, let's turn that into workers' comp, for instance. So if you have an employee that's on workers' comp that is working from that is off work completely because they're not able to work, if they then return to work in April and you put them back on the payroll and you start paying them $1,500 a fortnight, then they will be eligible for the job. Oh, sorry. Thank you for clarifying that. PPL, paid parental leave. So if you have an employee on paid parental leave, that expires in April and they're receiving that paid parental leave from Services Australia, they're not eligible for JobKeeper. If they return from paid parental leave and they are back on your books, then they become eligible when they are back on your books and you are paying them $1,500 per fortnight. What you might find as well is you've got to remember these payments are triggered by the number of people on your payroll. So if in one fortnightly you've only got 4 people on your payroll, but you're paying them more than $1,500, then you'll get 4 times that $1,500. If in the next payroll, if you have 6 people that you're paying more than $1,500, you'll get 6 times the $1,500. So you'll have people that are entering and exiting your payroll, and the applicability is twofold. It is Are they on your payroll and are they receiving $1,500 or more per fortnight? That is what will trigger the payments back to you. Okay, next question from Sophie. So if the business becomes eligible in April with a 30% drop, is the payment backdated to March? No, the payment is not backdated to March. It starts from the date that you become eligible. Could be April, could be May, could be June, could be August. It is from when you become eligible. Question from Greg. We're reporting quarterly, so would it be best to switch to monthly so that the testing can be done at the end of the month rather than waiting until the end of the quarter? So if you do switch to monthly for your BAS reporting, what you have to know is that you will then be monthly for at least 12 months. Now, the ATO has advised that they will have other mechanisms that we can report this drop in revenue. I actually don't believe that you should be switching to monthly reporting. I would leave your reporting at quarterly and access the other mechanisms that the ATO will have for us to advise revenue to them to test our eligibility. Question from Danielle. Can one director of our SMSF company apply for JobKeeper, noting our tenant, who is a gym and now shut down, is not paying rent, i.e. the super fund is now not earning an income? So that's a great question with a number of components. So the director of the SMSF company cannot apply because that director is not providing labour to its to that trustee company. So an SMSF trustee is a non-trading company that acts as trustee of a self-managed super fund. That company has directors. Those directors are not providing labour to that company, so they are not eligible for JobKeeper. Now, I will refer to an announcement that was made by our federal government just yesterday in relation to commercial rents. Now, at the minute, this is geared in the favour of the tenant. But what the federal government has said is that landlords, they have basically put in place a mandatory code of conduct for landlords and tenants. They call it the code, and it will receive legislation. And they're looking for landlords to provide cash flow relief. This is only for commercial tenants in proportion to the drop in turnover. So if you have a tenant that has dropped their turnover by, let's say, 60%, then you have to legally guarantee a 60% drop in their commercial rent, and that is waived rent. That is not rent that is repaid later. Half of that rent is waived and half of that rent is deferred. So if your rent is usually $1,000 a month, and your tenant has taken a 60% drop, then your rent is now $400 a month. Now you have to waive $200 of that and you can defer $200. And that deferral has got to be for at least 12 months. Now, the government has said that that deferral should be linked to the remaining term on the lease. Now, we will put some more information out on this. This only came out yesterday. If you have a tenant that's revenues, in the similar case to Danielle's question, the tenant's business income has fallen by 100%, then 50% of their rent must be waived, and the remainder is then deferred over the term of the lease, not shorter than 12 months. So this is certainly going to have an impact for us. Now, I did hear in past publications that landlords that were receiving a reduced rent by more than 30% would be eligible for JobKeeper. Since I heard those initial mutterings, I've not heard anything else. Let's see whether they come out with something on that today. But right now there is nothing for landlords other than going back to your bank and getting an easement on loan repayments. Many super funds don't have loans on their commercial properties, and basically it's a very difficult position for them. Okay, from Greg. You mentioned that the payment only applies when she still passes the test of the 30% decline on the previous year. What does that mean if the business picks up compared to the previous period last year and the business will no longer apply for the rest of the 6 months? Okay, so what Greg's saying too is for this quarter, when you've looked at your comparative to last financial year, your business had actually increased because your business was growing. So you don't pass this test for March. What we need is the ATO to give us the criteria that they will be using, the alternate criteria that they will be using to self-assess. So as soon as we have that, then we can self-assess and we can say to the government, to the ATO, we don't pass the 30% test, but these are the reasons why. Please consider us as eligible and approve us. So it's going to become a manual process if you don't pass that 30% test because your business has grown for whatever reason. Let's say in your business that you've started offering a service that you never offered before because it's a service that's required in today's climate. Let's say you've started manufacturing that you weren't manufacturing a product that you weren't manufacturing previously. Let's say it's face masks that you weren't previously manufacturing. Then I would believe that those businesses would have grounds to appeal to the ATO to their discretion to be eligible for those payments. We need to test that when the detail on this comes out. But have no doubt that if you are not eligible in March, but you become eligible in April, that's when you will start receiving these payments. If you become eligible in May, that is when you will start receiving these payments. A question from Darren. Do we have to link our payroll cycle to the government pay dates? No, you don't. You just have to have a fortnightly pay run within those pay dates. They have said that they will make proportional changes for monthly pay runs. So really the government's not asking you, I mean, they're asking you to do a lot, there's no doubt, but really they're not asking you to change your normal payroll function. Stick with the cycle that you already have. Great question, Darren. Okay, question from Craig. There was talk that if we took the JobKeeper payment, there was some kind of legal obligation to keep the employee employed after the 6-month period. So on that, the only thing the government that I've come across that the government has said on this is that you need to keep the employee engaged for this 6-month period. I have not heard anything that has said that you would need to keep them engaged after that 6-month period. That's going to need to be a question back to your HR people or to Fair Work Australia, I would suggest. So if the business recovery, a further question from Craig, if the business recovery is slower and the business can't afford to keep their team after the JobKeeper schemes, then you stand them down. Just like you would. So we go back to our usual circumstances unless the government comes out and extends this scheme or unless there is some other mechanism that the government keeps in place. This JobKeeper payment is for 6 months. That is it at the minute. We use it while we can. Once it's gone, we have to work things out for ourselves, basically. Okay, question from Steve. An employee is earning $2,000 per week, but I only have work for them for 4 days. I will pay $1,600 for 4 days' work. Can the employee cash in 1 day's annual leave to boost their salary? They can. So with these annual leave arrangements, and there's many of these around at the minute, so if you have an employee that you have 4 days work for and you're paying them 1 day's annual leave, so long as that payment is more than $1,500, then your business is eligible to claim JobKeeper for them. So it is perfectly fine that you give them some part-time work and some annual leave accrual and you pay them for that, and then so long as that is more than $1,500 per fortnight, you will get the $1,500 back from the government. So those arrangements can continue, absolutely. Question from Gabe. What if your staff have taken a pay cut to below the $1,500? Can you increase their pay to be eligible? It's not can you, Gabe, you have to. If they had taken the pay cut and they're now below $1,500, if you leave them at that level, you won't get the JobKeeper payment for them. You have to increase their pay up to that $1,500 level so that you can get the JobKeeper subsidy for them. Question from Lisa. We have only stood down certain employees and others are still working their normal hours. Can we qualify for the JobKeeper, or we claim the $1,500 per fortnight for every employee, or only the ones we have stood down? So Lisa, what it comes down to those employees on your payroll. So the ones that you've stood down, you need to basically put them back on the payroll and you need to start to pay them $1,500 per fortnight. So you've got some employees working for you, actually doing physical work that you continue to pay. You might have some employees that are working part-time and taking some annual leave that you continue to pay, and you might have some that you've completely stood down. All of those employees need to come back onto your payroll and you need to pay every single one of them $1,500 per fortnight, and you will then receive the $1,500 per fortnight from the government to keep your business cash flow going. Question from Lee. Is there any guidance on how to determine what is the usual wage for casuals for the basis of paying super guarantee? Well, it would be, I would suggest, consistent with what you were paying them in the past. So if you had a casual that worked for you 1 day a week, then that would be their usual wage. If you had a casual that worked for you for 16 hours a week, then that would be their usual wage. So you just need to look at what you had done in the past, and then so long as you follow those lines, then you should be okay. Question from Belinda. What if your business has a downturn of over 30% for March but not April, and it then decreases to over 30% again? What I'm imagining, and again I'm only speculating now because there's no detail on this, I'm imagining that when that we have to submit some information to the ATO on a regular basis, possibly a monthly basis, to let them know what our turnover is for this period. So it's initially it's going to be linked to that quarterly BAS or that monthly BAS, but I'm imagining there's going to be some other mechanism that we continue to submit our turnover information to the ATO, because it could be for some months that your turnover has increased again and you fall out of that eligibility. Now, the risk that you've got as an employer is during that month you might have paid $1,500 out to each of your employees. Now, if by some reason your turnover hasn't fallen by 30% in that month, you're going to be caught because you've paid your employees the $1,500, but you're not going to get it back from the government. So as employers, we have to be particularly careful here, and you need to be absolutely on top of this business revenue, because that it's our business revenue that's going to drive whether we pay our employees and whether we then get the subsidy. Quite a risky area for us, I have no doubt. Sullivan Dewing, we're in exactly the same position as you, we all are. But it's going to be a month-by-month basis, the eligibility for this JobKeeper payment. Okay, let me have a look at some further questions. Okay, what are the implications from Nicole? What are the implications for our business who has changed from a cash to an accrual system? That's a GST cash to accruals from last year to this year. So what happens, Nicole, is so what you're saying, Nicole, is your BAS last year was a cash basis and this year it's an accruals basis. Now, isn't that a good question? I think, Nicole, I think I might take that one on note and come back to you on that. I've not thought about that directly, but that is a very good question. Okay, we'll come back to you on that, Nicole. Thank you. Question from Jan. We are currently paying pay-as-you-go monthly on our IAS and declare income quarterly on the BAS. Can we apply for JobKeeper before waiting for the June BAS? Absolutely. So the JobKeeper is not really conditional on the June BAS. The March BAS is the first test for reporting, and after that it would be the amount that that you are reporting on revenue to the government in whatever format they put out to us on a monthly basis. So the example that Jan has given is based on April 20 versus April 19. The March quarter income doesn't show the 30% drop, but we are sitting 50% less revenue from mid-March onwards. Should we switch to monthly BAS? Or can we just use my old figures to show the difference? So Jan, this would again refer to the March BAS is the starting point. I would suggest after that it's going to be a monthly advising to the ATO of what your turnover will be. Don't shoot me if I'm wrong on this, guys. I don't know any more than you know on this. The ATO has not put this information out yet. All they have said is that there will be a mechanism to report your income to test your eligibility. We just don't know what it is yet, but there will be a mechanism, and that is what we will all have to use to let the government know our income to test our eligibility. Okay, another question from Jan. What if we apply for JobKeeper, we can show the 30% drop in revenue and then manage to pull the rabbit out of the hat due to restructuring and no longer have that drop? Then you will fall out of the eligibility. So that test is going to be on a month-by-month basis. Do we then advise and we drop the JobKeeper? Yes, you have to advise, and yes, you would drop out of JobKeeper. What do we do about the $1,500 per fortnightly that we've already prepaid to the workers who usually earned less than that? As I alluded to before, that is the sticky position that you are going to be in, and a very difficult decision for business owners. So you really want to be sure that you're going to be receiving that, or you're going to be having a 30% drop in your business revenue before you start to pay your employees that $1,500 when they weren't on $1,500. I acknowledge it's difficult. there are many businesses that are under this same condition. Should we draw up employment contracts that say that prepaid money has to be repaid to us if we don't qualify, or if we have to withdraw from the scheme? I think that's going to come down to the HR lawyers to answer that. I want to give my employees every chance to be included, but not sure how to go out protecting our interests in the event that we don't qualify. So, as I mentioned, so I think your first position is to write to your employees and get their approval that you are that they want to be as part of this JobKeeper scheme. That's step number one. Step number two is you do your initial registration with the government. Step number three is that you need to keep testing that revenue and just be mindful of these fortnightly dates that the ATO has. I've published those in the presentation, the dates that they start. And just know that if you are cautious because you're not sure about your revenue and you don't get those payments into that first fortnight, then you won't get the subsidy. Maybe you'll have a look at the second fortnight. If you're more confident that your revenue has dropped, then you might do those $1,500 payments. But I would say absolutely be cautious with spending that $1,500 where you don't have to if you're not 100% sure that you're not going to get that payment. Okay, we're starting to run out of time. I'll try and get through these remaining questions for you. Okay, where I've answered these questions, I will just skip that one. Okay, question from Deb. If our employees are not working when we bring them back from being stood down, do we need to keep paying super? I think I've answered that in the presentation. If they were stood down and you bring them back and you pay them the $1,500, you do not need to pay super on that $1,500. Another question from Deb. Our revenue dropped 27% in March compared to the year before, but 100% in April. Does that mean our employees will not be eligible for the JobKeeper until the second fortnight of this program? If you're looking at the hard number of 27%, Deb, I would suggest yes, they won't be eligible for the first fortnight, but they would be eligible for the second. What is the definition of a regular and systematic casual employee? One that you had given, I mean, I have no legal definition on this, Jennifer, but let's use common sense. One that you had given similar shifts to over that 12-month period. Question from Karen. I have a casual who usually receives $750 a fortnight. Is it my choice if I put her on JobKeeper, given the large discrepancy in the amounts? So Karen, you don't have to put her on JobKeeper. That is up to you. Yeah, that's completely up to you. If you don't want to, then you don't have to. Craig, there was talk that if we took the JobKeeper, oh sorry, I think I've answered that question for you, Craig. Question from Christine. What if you have made 2 staff redundant before the package was announced and your turnover is now down over 50%? So Christine, the date of eligibility is the 1st of March. So if you made them redundant before the 1st of March, they are not eligible for JobKeeper through your business at all. If you made them redundant after the 1st of March, then you can put them back on the payroll, and then you can start to pay them the $1,500 and claim that $1,500 back from the government. Okay, couple more questions, and these will be the final few. Are companies assessed on an individual basis or a group basis? So there are some consolidation measures there. Sharon, I might come back to you specifically on that. It's a little bit technical for this webinar. Question from Wendy. Can I backdate the $1,500 payments, i.e. pay for March in April or May? So Wendy, you really need to be making these payments in the fortnights that that the government has set down. So if you don't see, what you have to be careful of here, Wendy, is those anti-avoidance measures. So if you know in your business that you can satisfy that the 30% drop in revenue test, you need to start making those payments now. You cannot wait until you get that money from the government. You actually won't get that money from the government because the test for the government is when the payment was made to the employee. So if you make those payments in April or May and try and backdate them to from 30 March, you won't be eligible for those payments. They have to fall in that fortnightly payment and come out of your business then. All right, I understand there is a lot of interest in this topic and that you have a lot of questions. Let me just answer these last two and then we will wrap this up. From an anonymous attendee, ooh, that's exciting. We have a 16-year-old school student who lives at home with mum and dad and comes in one afternoon a week after school to sweep and tidy the factory. Does he really now get $1,500 per fortnight, up from $120 per fortnight under JobKeeper? And so we'll have kids running around with $1,500 in their pockets. I agree, Anonymous, absolutely ridiculous, but that is what the legislation is saying. That is what the government is saying. Now, if you don't want to continue to employ that person, and let's say you gave that cleaning activity to now an employee who doesn't have as many regular duties, then you can just basically stand that employee down. You don't have to put them back on the payroll. So I would suggest that that's how you would get around that ridiculous circumstance. Okay, question from Leanne. What if you increase employees pay to $1,500 but then you don't have the 30% downturn? Your downturn is only 20% but you paid the $1,500, you may be worse off. I agree, Leanne. So you really need to be quite confident that you are going to satisfy that 30% reduction before you start paying those $1,500 out. Otherwise, your business, which is already challenged, as all our businesses are, otherwise that business is going to be in a worse position than they already are. So I'd suggest no. So, okay, so I would say thank you everyone for your questions. Let's leave it at that. I appreciate your questions and your comments this morning. Thank you for attending our webinar. So as mentioned, we will put out a recording of this webinar and we will answer any further questions that we have. We'll send the slides out to you, but again, we are across this as much as we possibly can be. Keep coming to us and talking to us and asking your questions. We are here to help you as much as we possibly can. We will get through all this. It's clunky, it's new. I can't believe how much all of us are overcoming right now in our learning curves. They are so steep, but we will get through it. We will claim as much government support as we can, and we just need to batten down, do the best we can and get through this. All right, guys, lovely webinaring with you this morning. I will talk to you soon. Thank you. Bye now.